Namaste viewers. Today, we are having one of the best fund managers from PGIM India Mutual Fund, and PGIM is one of the largest global asset management firms that has been present in India for a decade. They manage about $1.5 trillion in AUM. It is trillion, not billion. $1.5 trillion in AUM around the world, and carry a legacy of almost 140 years in existence. They are into this business for the last 140 years. PGIM India Mutual Funds manages 11,000 crores, including 1,500 crore offshore funds, of which 80% is in equity and equity-related instruments. So their major focus is in equity and equity-related right now. Probably that might change as the fund house grows. Aniruddha Naha is a senior fund manager with PGIM India Asset Management Company. He is the fund manager for PGIM India FlexiCap Fund, PGIM India Midcap Opportunities Fund, and then recently launched PGIM India Balanced Advantage Fund. So all the three funds he manages. Aniruddha has done his master's in finance and control and has over 19 years of experience in the industry. Earlier to PGIM, he has worked with IDFC, Mire, DSP, and other financial service providers. The main reason why I am taking Aniruddha today is, to understand the success or secret of his fund management style, so that you can understand as an investor, you can understand how he manages. Because in the recent past, if you see the funds that he manages for quite some time now, PGIM India FlexiCap as well as PGIM India Midcap Opportunities, both of them have done exceedingly well, in the sense they have given returns more than the benchmark. And one of his fund, Midcap Opportunities Fund, in the last 1 year trailing, last 12 months, it has performed, it has given 100% returns, 100% returns, the Midcap Fund, which is again a very good performance. So that is the main reason we are discussing with Aniruddha Naha. And then our focus for today's discussion is small and mid-cap segment. Although he manages FlexiCap, but the focus of this discussion is small and mid-cap funds. Welcome, Aniruddha. Welcome.
Thank
How are
you.
you doing?
I'm fine. Thank you for this opportunity. It's a pleasure being here on your channel.
Yeah, Aniruddha, I know you from your IDFC days, where you used to manage IDFC Sterling Fund. Now it is called IDFC Sterling Value Fund. Right. So even I have spoken once for an interview with Nanayam Vigadan for that purpose at that point of time. Now today, there are many talks about small and mid-cap segment as a whole. It is highly volatile. Companies may disappear all of a sudden, high risk, so don't enter. There are still people in the industry, in the mutual fund industry itself, who say that don't touch small and mid cap, be very careful. It may the returns may all of a sudden go down very drastically. So before getting into that, can you please explain to our viewers about the category small and mid cap, and what are the characteristics of this segment, and how they are classified, in the sense that SEBI has come out with the market capitalization norm. So all those things, if you can give some view to our viewers.
Sure. Thank you. Thank you again for this opportunity. Hello, viewers. Just on the market categorization of large cap, mid cap, small cap, it is all determined by the market capitalization. The first 100 companies are called the large cap companies. The 101st company to the 250th company is categorized as the mid cap companies. Any company below the 250th company, from 251st onwards, is the small cap segment. Now, the uniqueness of the small cap segment, to give you a sense, is there are more than 6,000 companies out there. So it's a huge universe, and that is probably the first uniqueness that it has. In terms of probably what the mid and small cap segment holds for investors is there are a lot of emerging businesses, which get probably incubated in the listed space, either in the mid cap or small cap segment. And then over time, they graduate either to become mid caps or large caps. So, when you want to catch the businesses early in their initial stage, probably that is the segment to look at. They have a very good representation across sectors. So you name the sector, you would find a representation there. In fact, the mid and small cap have a better representation of the economy across sectors, even vis-a-vis the large cap. The small cap, as I mentioned, it has a longer tail. The one thing about the small cap segment, the large caps are the most well-researched and most well-owned segment. The mid cap is somewhere little below that in that sense in terms of research, but still it is pretty well researched. Ownership might be lower than the large caps. The small cap segment, given the number of companies, the one thing which is unique out there is it is very under-owned and pretty under-researched. And hence, the chances of picking up a good business, which is still undiscovered, lies in that segment the most.
Okay, good. But now if you can put in today's value and in absolute terms, the 100th company, we know the topmost company is in lakhs of crores. Mm-hmm. And the 100th company in the large cap segment, approximately how much would be?
So I will tell you the largest small cap, which is the 250th company, 251st company. That's a number I have, I recall very clearly. It's about 8,300 crores as per AMFI classification of December 2020. Okay. Now, 8,300 crores is a pretty decent size. So because the overall market capitalization has moved up, the 251st company, which is the largest small cap, is also a decent sized, mid-sized company, but it is classified as a small cap because it's in the 251st in terms of ranking. So anything above 8,300 approximately is the large and mid cap segment.
Done. Okay. Then generally in this mid cap and small cap segment, the risks, what are the risks and as well as opportunities? Wherever there is a risk, there will be definitely a good opportunity as well. So if you can, in very simple terms, if you can explain to our viewers, it would be helpful.
Sure. I think this is a very pertinent question. So let's take the risks first. Now, generally in the market, people use the term volatility and risks interchangeably, but they have two different meanings. Now, mid caps and small caps, there are risks and there is volatility, both of them. Now, the volatile part is because there is some amount of illiquidity. People want to get out or get in at any price, and that creates volatility. And volatility means the movement in share price. The movement in share price doesn't mean that it is risky. Please understand that. Now, what are the risks? See, the risks emanate from the fact that the quality of businesses could be very varied. The large caps are large caps today because they have a certain set of quality in terms of the promoters, probably in terms of the cash flows that they generate, the cleanliness of the balance sheet. Similar would be the case for the mid cap segment and the small cap segment. So the quality is varied. You would find some very good businesses in the mid and small cap side. Absolutely no questions about it, spick and span. But there would be not so great businesses also there in the mid and small cap side. Secondly is many of these businesses in the mid and small cap size are promoter driven. So we have to understand what is the intent of the promoter. Are his interests aligned with the interests of the minority shareholders like you and me? So if the interests are aligned, that's a very good thing to have. If the interests are not aligned, then one needs to be careful about investing into these companies. So what one can do is one can actually, look through the history of its company. And that's what we try and do, especially with regards to corporate governance is something that one needs to be careful about. And what we try and do is we read through the history of a company, and the numbers and the history will speak about what the company is all about. So one needs to be careful, but it doesn't mean that mid caps and small caps are risky per se. You can't bracket them together. Now, in terms of opportunities, no doubt over a longer period of time, the alpha which gets created in the mid and small cap side is tremendous. People make a lot of money if you buy a good business at a reasonable price. So that is the first part of it. Second part of it, when you talk about risks, I would want to highlight a figure which we came out while preparing for the small cap. The cleanliness of corporate India's balance sheets today is surprising. Today, the mid-cap segment has overall a debt to equity of about 0.95%, less than 1%. What is even more surprising, people are scared about, let's say, the small cap segment. But the small cap segment balance sheet debt to equity is 0.85, lower than the mid cap. And lower the number, better it is. It basically shows that much of resilience. So we've got the resilience in mid and small caps today. We are today coming out of let's say, a down cycle in that sense. And most of these companies have been able to manage the down cycle because they didn't have debt. So the segment today is far stronger than in terms of their balance sheets and cash flows than what they used to be. So from a risk perspective, our sense is the risks are very low today and they are well capitalized. So they have the balance sheets to participate in growth whenever they come back. And finally, the opportunity is they give you exposure to segments which are probably not there in large caps. Something like, let's say, textiles, papers, something like real estate. Real estate is a big sector globally. You don't have those exposures in India.
Okay. So there are very good opportunities, but the risk you mean if you choose the right business, there will be volatility, but may not, they may not go off the radar completely.
Absolutely, sir. So our sense is there are fantastic opportunities. One needs to be careful what you're investing in. Be prepared for volatility. But if you choose the company well, the risks are very minimal.
Okay. Yeah, because I understand. Say like there are a lot of companies, probably just for the people's understanding, I may name it. Say like TVS Group. There are a lot of companies in small and mid cap category. There are smaller banks like City Union Bank and many of them which have very good credentials, very good quality. So similarly, pressure cooker companies like Prestige or whatever, Hawkins, so we can name a lot of these companies and small and mid cap segment as a whole. They are very good quality companies. I agree with that.
Sure.
And most of the investors in general, retail investors have been taught not to invest in small and mid cap segments as it is a high risk, high reward segment in general. It could be from the regulatory perspective or from a teaching perspective, education perspective, everywhere. Also, there is no much depth in that segment. That's what being told. How do you view this?
So there is risk. The risks are a little higher than probably the large cap segment, no doubt on that. But see, if you have a good process, the process is aimed at eliminating risks, I think so that should be something which should help you. To give you a sense, last 3 years in our portfolios have done well, not just because we've captured the upside in terms of returns. We were able to eliminate a lot of risks and protect the downside when it happened. So what do we do? And probably that could be one of the templates to follow. We focus on operating cash flows, the cash flows generated through the operations of a business. And we don't look at the company in just 1 year. We go into the history of the company to see how the company has managed the down cycle, because that is where it is the toughest to manage cash flows. And if the company has been able to manage their operating cash flows at the bottom of a cycle, it speaks a lot about the DNA and the resilience of that business. So our first criteria is in 7 out of 10 years or 70% of the time, they must have positive operating cash flows. And this is over the long period. So it means it gives you a good sense of the quality of that business. The second thing that we look for along with this is that the balance sheet should be clean. So we say net debt to equity should be less than 3. So that is the second thing that we do. And lastly, this is a little subjective, but we look for businesses where in the history there is no major corporate governance issues. These 3 things put together, when you put it into that system of filtering companies, it eliminates a lot of not so great businesses, and it has helped us at least build a good portfolio across our platform.
Very good. So one is operating cash flow and another is corporate governance. What is the third one?
balance sheet, cleanliness of the balance sheet.
Cleanliness.
Debt to equity less than 3 or net debt to equity less than 2.
Less than 2. Okay, okay. That is the overall your alignment process. Okay. And how is the current scenario for small and mid cap segment? I mean, as we speak, because say like for example, one of your funds that you manage has given more than 100%. So there is another opinion, school of thought, that whenever small cap mid cap delivers 100%, then it is time for it to come down. I mean, go down. To give appreciation will be minimal, or it might go into negative. That is the kind of general thumb rule kind of thing people follow. So do you think still there is steam left in the small and mid cap segment?
So again, it is a very good question. First thing, let me caution investors. The experience in the last 1 year, what people have gained in terms of returns, please do not expect those returns to get repeated probably this financial year or even the next one. Those kind of returns in a single year rarely come. Second thing you have to be careful about, especially in the mid and small cap segment, is 100% or 120, 150% kind of returns, whatever you have gained in the last 1 year. The year prior to that, the small cap index was down 45%. The mid cap index was also down nearer to 40%. So it's come out of a base where things were really low and hence moved up. When you look at a combined basis on a 2-year basis, returns are more normalized. When you look at a 3-year basis or 4-year basis or 5-year basis, I can tell you with enough this thing that small caps have actually underperformed the Nifty also on a longer term. Okay. Now our sense is that this year's return and next year's return are not going to be anything as stupendous as what you have already got. But over the next 4-5 years, can one go ahead and expect a 16 to 18% kind of return CAGR in a good mid cap or small cap fund? That is highly possible. And our belief is, as an asset class, equity will continue to outperform a lot of other asset classes. And hence, to create wealth and alpha, equities will be the one of the ways out, frankly speaking.
Okay. Sure. So in a longer term, the funds will perform better. Small and mid cap will outperform, but in the shorter term, there could be risks always.
Yes, it could be volatile, no doubt, and that volatility could lead to some amount of negative returns also in the near term. We can't discount that.
Sure. I would like to understand the percentage of, say like if our overall India's market capitalization, all the companies put together, listed companies put together, is, let us assume 1 lakh rupees, just for an example, or whatever, 100%. Out of that, how much is small cap and how much is mid cap?
So this approximately. Sure. So I think some mid and small caps put together is about 33 to 35%. The rest is large caps. So that is where the opportunity is, because there are a lot of industries in this 33, 35%, which has the chance to grow over the next year.
Okay. Sure. So, but at when, say like sometime back, if we go back 2018, 2019, during down times, the large cap market cap goes up. Say like it could go up like as a percentage, it will be like 75% or 80% and whatever it is. Right. So and the small cap mid cap size reduces whatever because of the fear factor.
Because of the fear factor, the prices coming down, that segment becomes a smaller segment of the market. Today it's around 33 to 35%.
Okay. And regarding this, market rally that is happening right now or the last 1 year, I agree that last year it was a big downturn, and then from there it is coming up. So for 50% down, it has to come up 100%.
Absolutely.
So in that sense, so this rally, people are generally suspicious, or they are very afraid of, worried. Many investors, conservative investors. So is it going to remain for a while, or should investors be worried at this point of time in general?
So again, what we keep suggesting to investors is, please understand your risk appetite and your time frame. These are two important things which will determine which end of the market you need to take an exposure to. If you are someone who's happy with 8, 10, 12% return average CAGR, beating the inflation, there are segments like the large cap, the hybrid, balance advantage funds, etc., which probably will be able to give you returns nearer to that with very little volatility and risk. If your time frame is longer, you want to be 5 years plus invested or 10 years, that is your perspective. You don't mind some amount of drawdowns and bouts of volatility, then probably the mid and small cap segment starts making sense. So here the individual investor needs to take a call on his or her own risk appetite. What usually happens is when returns are coming, people forget the risk component in their own asset allocation. They must always be cognizant of what their risk appetite is and accordingly go ahead and invest. I think so. If they do that through a cycle, on the up cycle as well as a down cycle, they will be pretty happy.
Okay. Yeah, agreed point. Generally. And generally, who should invest in this small and mid cap segment, and what is the time horizon to come out successfully from this investment?
Sure. I think this is again very interesting. This is probably what we were hinting at the previous question also, that the time perspective becomes very interesting, very important. Anyone in the mid cap segment has to come in with a time frame of nearer to 5 years or more if possible. Even in the small cap segment, it has to be at least 5 years. You have to ride a full cycle, see the down cycle. That makes you an even more mature investor to that extent. And over the next 5-10 years, if you can stay put, I think so India has a great story playing out in the markets over the next 5-10 years, and it will create alpha. So requirements are at least 5 years of investments thought process to come into the mid and small cap segment. And the second part of it is you must be ready for drawdowns of 20-25% at some point of time, probably. And those drawdowns should be used as opportunities to invest rather than panic and redeem. So if you can do that, if you can manage that psychology at that bottom end of the market, when things are really volatile, that is where you go ahead and create a lot of wealth.
True. I agree with. Sometimes we tell to our investors, investing is more an art than a science. You mentioned the word psychology. So it is 100% true. It is controlling the emotions and keeping up calm, quiet during meltdowns that helps investment process.
Absolutely.
And generally, as a fund house, where do you want the money to come from, as SIP, STP, or bulk? Or rather, I would put the other way around: what investors should do when they come to this segment, small and mid cap segment. Should they bring bulk money or SIP, STP, which is more favorable to them?
So I will again on the previous answer. See, if you have a 5-year time frame and you're ready for a, let's say, 20-25% of volatility, bouts of volatility, you can come in even in a lump sum. It doesn't matter, provided you are sure you can handle that 20-25% kind of down cycles, drawdowns. If you can do that with a perspective of say 5-10 years, whichever you have, creating wealth over a long time, lump sum is absolutely fine. If you are investors who would want to try and time it, and I can tell you it is one of the most difficult things to do it, one could probably do some amount of lump sum and then continue with an SIP, STP. And during the SIP, STP, if you get the correction which everyone is waiting for, please use that as an opportunity to put in the remaining lump sum amount in that sense. So there is no defined answer, frankly speaking, or an exact formula, but it will all depend on how, frankly speaking, it boils down to how investors handle the drawdowns rather than how they handle the the returns, frankly speaking.
Returns, upside or whatever you call it. One of the reasons that I initiated a discussion with you, with an interview with you, is I heard that you are coming out with a small cap NFO.
Yes.
I was puzzled that when everyone is shouting loud there, then market are overheated in general and all those things. So it wondered me why you are coming out with this small cap NFO, and particularly at this point of time. So
Sure.
Just want to understand your thought process and why you have come out with this, PGIM India small cap NFO right now.
Sure. Thank you for this question. Actually, again, just to highlight, the last year was stupendous. So people need to temper their expectation from NFOs or existing small cap and mid cap funds also going ahead. I think the next 5 years should be fine. And how one handles the next 3 months, 6 months is a question. So we have launched this fund not with the idea of generating returns in the next 3-6 months. The idea is to give the investors a chance to invest into a good fund, which we will construct with a view for the next 3 years, 5 years, 10 years. Okay, so it's a long run. We are here to run a marathon rather than 100 meters. In the initial 3 months, etc., can there be drawdowns and can the NAV go down below 10 due to volatility? It can happen. Absolutely no doubt on that. It is a matter of how the team or the investment team at our end handles the downturn. Third thing is this segment offers a lot of opportunities. In spite of the rallies, there are businesses which are undervalued, undiscovered. As I said, this is a segment which is under researched and under owned. So our idea is to go ahead and build a portfolio with about 40-45 stocks. And can we go ahead and construct a good portfolio for the next 3-5 years? We definitely can, even at these valuations. Maybe the next 3-6 months will be volatile. Finally, in spite of being an AMC where AUM is what finally matters, we've decided to cap the inflows at 500 crores for the small cap. Initially, the idea is to give investors who come in a good experience. We want to spread out on building the portfolio. 65% of the portfolio, as per the regulator, needs to be in the small cap and needs to get deployed within a month's time. We will
within a month's time.
Yes.
Oh, okay.
So we will be 70-75% definitely deployed within a month's time. It is not going to be that big an issue because if you remember, the largest company is 8,300 crore market cap. So there is enough leeway. But having said that, the remaining 25-30%, we will decide, we will take our time, whether we go ahead directly and invest into the small cap segment now. It will all depend on when we get the money and where the valuations are. If we don't find things which are really very interesting at a reasonable price, we will probably lay low by buying into certain large caps and mid caps, liquid ones, and they will also generate alpha. There is no doubt on that. But at an appropriate time, probably we will then start expanding the small cap segment in the portfolio. So to answer your question, I think so there is still a lot of runway if one takes a 3-5 year view. As I said, on a 3-year, 4-year, 5-year view, small caps are still underperforming Nifty reasonably.
In the past, okay, the past. So that's, and one of the things that you said is you are going to cap the inflow at 500 crore during NFO or post NFO.
Even during the NFO, on a day it crosses 500 crores, we will have to keep it open for that day because we can't close it during the day. So we will have to accept all the money that comes in during that day. But once that day goes by, we can then actually come out with a notice saying that we are closing this because we have crossed this 500 crores. So idea is it could happen at any point of the time. Idea is, let's say on the last day, we were about say 300 crores and then another 350 or 400 crores comes on the last day. We will still be 700 crores. We will have to accept that. There is absolutely no doubt. The thing is, on the day it crosses, that day we will have to accept whatever comes. And after that, we will. Anyway, if it comes on the last day also, whatever comes in, we will definitely keep it, then close the fund for some time. Go ahead and deploy it, build a good portfolio, and then at an opportune moment, we will open it up. Having said that, this fund will be open for all SIPs and STPs.
Okay, always.
Yes.
Always. Okay, good. That is good. Is this the right time to take exposure in this segment, provided a guy has 5 years timeline, 5 years and above?
I think so. If you have a time frame, if your time frame is 5 years, see, we've seen over business cycles and in the history, you come into the market in the mid and small cap segment anytime. But if you stay for 5 years, you will invariably at some point or the other, move into a positive territory. So if you have a 5 years time frame and you have the risk appetite of, let's say, a drawdown, then there is absolutely no two thoughts about whether this is the right time or not. Of course, the investor can calibrate it through, some amount of lump sum and some amount of SIPs, STPs, whatever his risk appetite is. But small and mid caps generally have created a lot of wealth. And if the time perspective is 5-10 years, you will create wealth in this segment.
Good. Agree. And you might have already put up a plan saying how you are going to manage, how you are going to choose stocks, what are the criteria that you are going to look at. So can you share that with our viewers
Yes,
for
sure.
this small cap particularly? Enough.
So the process, frankly speaking, for all our funds is the same. We don't change the rules of the game, frankly speaking, to put it that way. So the first criteria will be in 70% or 7 out of 10 years, these companies must have operating cash flows, positive operating cash flows. The second is the balance sheets of these companies must be clean, and hence debt to equity needs to be less than 3. If the net debt to equity is less than 2, even better. And third, there must be no major corporate governance issues. These are the 3 components which take care of the risk for us. From a valuation perspective, we usually like to buy businesses at a reasonable price. We don't buy businesses, very expensive businesses, just because they are great businesses. So our valuation framework is growth at a reasonable price. So that is what we follow. The focus will always be on good businesses with decent ROEs historically. So there will be a focus on clean balance sheets, strong operating cash flows, and good ROEs.
Good order.
Yes.
Do you have a minimum size of market cap for choosing the stock?
No, we don't have it. So that is where probably the strength of our team lies. We will look across the market cap in the small cap segment, and anything and everything which fits into this the process is something which will get filtered into the universe. After that, we will do our individual studies of these companies, and depending on how lucrative they are or whether it makes sense to bring them into the portfolio, we will go ahead and take a decision.
Okay. Sounds good. That seems very methodical, and you have put in place certain framework. Now, more or less, I am done with my general questions on the small cap, mid cap segment. However, if you want to share with our investors, it could be something like investment tips or advice or your experience or your personal savings, where you put your money. That's one of the questions many people ask me. You are advising me, you are telling us to invest in mutual funds, but where do you invest?
Sure.
So your hobbies, family, whatever you want to share something with our investors.
So I can only few things probably. One is equities as an asset class will probably be one of the best return generating asset class over a longer period of time. They will be volatile because they give you those returns also. So if an investor is able to manage or handle the drawdown segments periods, I think he will go ahead and build a very successful portfolio for himself over time and create wealth for himself. So keep that in mind. Give a decent allocation towards equities, because today, if you look at FDs, etc., or even probably certain fixed income products, they are not even matching up to the inflation rate, and hence real returns are negative today. And hence people have to take a bit of a risk, spread out their investments, probably build a portfolio for the next 5-10 years. If you can have that vision, I think so that is very good. From a personal perspective, I am largely an equity person. A large part of my money actually flows into my own funds that I manage. So balance, because I have a little bit of more risk appetite, I don't look at balance advantage funds. It largely mid caps and the flexi cap. But I'm waiting for the small cap to get launched. I will definitely invest my personal money into that fund.
Okay, good. And you are from Mumbai always, or you are from?
No, so I was born and brought up in South India. I'm a Bengali born and brought up in South India. I have graduated from Calcutta, which is East India. I did my master's from Delhi, which is North India, and I have continuously worked in West India, Mumbai, excepting for 3 years where I was in Hong Kong.
Okay. Now
So
you are settled in Mumbai.
in that nature.
Very good. It was wonderful talking with you, Aniruddha.
Thank you.
And thanks for your time and input and sharing your thoughts, philosophies. Because with this advent of this social media, it could be YouTube or any other things. People are people can get good knowledge directly from the mouth of those people who are managing and who are doing this on a in a very personalized manner. Thanks for participating, and probably next time when you are in Chennai, when everything gets cleared, now it is clear. So, and if you are traveling, please do drop by. We can have a chat.
Sure, it was our pleasure. It was my pleasure speaking to you. And definitely, if when I'm in Chennai, I will definitely come down and catch up with you.
Sure,
Thank
sure.
you. Thank you for hosting.
Yeah, thank you, Aniruddha.
Me.